Hey guys, it's Jason at Hard Money Bankers with your Private Money Minute. Today I want to talk about a little finance hack to help grow your assets, and it's something that we use on a regular basis. I'll be honest with you, it's a little challenging to get this thing to set up. It's a little hard, but if you can make this thing work, I promise you your assets are going to grow very, very quickly. And we all know that our assets are going to outgrow any other hard work that we're doing. Doesn't matter how much money you're making on a regular basis. If you have assets that are growing kind of in the background, they're going to outperform your hard work any day. And that's the goal, is to have your assets continuing to grow so you have all that money passively working for you on the sidelines. So the way it works is like this. Think about it like this. Every dollar that we make, we want to put $1 into taxes, and then we want to put another $1 into an asset. Now, depending on what tax bracket you're in, I understand that your taxes are could be a lot more than 33%, but let's just pretend that they're 1/3. So for every $3 you make, $1 goes to yourself, $1 goes to the man, to the taxes, and $1 goes into investing in an asset. So let's break this down on a little bit of a higher level. So if you make $180,000 a year gross, and this is more for entrepreneurs. I guess if you're a W-2 or staff member, this could work for you as well, although you get taxes taken out of your check, so it works a little bit different. But for every $180,000 you make, that's $15,000 a month. Let's say you make $15,000 a month. $5,000 goes to your general homes checking account. That's just $5,000 goes to what you can spend every month. It could be a mortgage, it could be bills, could be anything. $5,000 goes that way. $5,000 is going to taxes, and then $5,000 is going to an asset. Right? I know that seems a little bit crazy, but if you kind of think of it on a mindset, on a high level, it really makes a lot of sense. So for instance, let's say you want to take on you want to buy something and it's going to take on an extra $1,000 a month. Well, if you want to buy something that's going to take on $1,000 a month, you got to make $3,000 extra a month to do that, right? Because that $3,000, every time you pay yourself, you're paying the man, and then you're paying your asset account. I would try to stay as disciplined as possible. If it doesn't follow that to a T, so be it, but stay as disciplined as you can. And the high level rule of thumb on this is you pay yourself and then you pay an asset. We all know what assets are. You can buy stocks, you can buy real estate, you can buy passive rental properties, you can invest in notes. If you want, just throw it into money market or a savings account. But the goal is that your money that you spend every month and your assets that are sitting on the sidelines should be growing, because your assets will outperform your income every day of the week. And try to really be disciplined on it. Make sure you're doing it kind of on a regular basis, and after you do that, it makes it a lot easier. So this was a hack that we started doing probably a few years ago when it was really, really hard, because you see over here, it's like, hey, I'm making all this money, but I'm not really taking home any money, and I'm living a kind of a stingy lifestyle. So again, you may want to just spend every dollar you have, but this is kind of a hack that's more of a longer term play, and my goal is obviously not to work forever, and if my assets are working for me over here, I'm not going to have to. So something to think about. If you have a similar finance hack that you're doing just to help keep you disciplined, definitely share it with the community. Comment below related to that. I'm sure everyone will have a lot of feedback. If anyone has any questions with this, you can always comment below, and I'll reach out. Like, comment, share, subscribe. This is Jason with your Private Money Minute.